Hi, folks. I'm Hector Garcia, CPA and business consultant. I'm joined by my friend Matthew Fulton, who was actually named top 100 QuickBooks Pro advisors for 2020. So, congratulations on that. And you might have seen Matthew's name on several PPP loan forgiveness webinars that ADP was running. ADP partnered with Matthew to create some of these educational programs, and also uh, Matthew had a lot of input on the PPP loan reports that ADP is creating for the end users and for their accountants. So Matthew's a great resource, and it's my friend as well. And Jacob, who's a CPA based out of Ohio, working with a lot of manufacturers and industries, did a lot of PPP loans as well. A good friend of mine also. Jacob and I actually exchange a lot of ideas when it comes to taxes, tax planning, interpreting changes to the tax law. So these are my friends and colleagues. And the reason why we're doing this together is because we're putting up a webinar on September 21st about PPP loan forgiveness. I'll talk about it towards the end of the video. Okay, it's not an infomercial for it, but of course, if you want to learn from us, we will give you the option to go deep dive into that. Before we start the conversation, I want to share my screen real quick, because I want to show you where the opportunity is in the world of PPP loan forgiveness. So the latest report that the SBA gave us, which was published on August 8th, which is the last day of the program, so they have all the stats, all the data that was submitted to the SBA, tells us that there's 5.2 million loans outstanding. Huge opportunity. This is roughly about 20% to 15% of the entire world of small businesses in the US. Is $500 billion that people are going to want to get it forgiven. So we, in the accounting profession, consultants, PPP experts, let's call ourselves that, are going to help people basically keep $525 billion in their pocket and not back to the government. There's a huge opportunity of value we can create in the accounting consulting profession. Something else is worth mentioning from this document, and I'll put a link in the description to this document if you want to see it, is the average loan size. The average loan size is $101,000. And if you're familiar with the PPP loan program, you were getting around $10,000 per employee that was making $50,000 a year, and about $20,000 per employee that was making $100,000 or more per year. So you can extrapolate that the average loan size of $100,000 was probably a business with 10 employees. Okay, you can extrapolate about $10,000 per employee, maximum of $20,000, because that was the cap for those employees. So that was actually worth mentioning. The other thing that's also worth mentioning, especially if you're an accounting professional, business consultant, PPP expert, payroll expert, whatever you want to call yourself, and you're going to want to tap into this opportunity of helping small businesses keep their money, and I give it back to Uncle Sam. In the Treasury website, they published a database, as an Excel file, that contains every single business, name, address, loan size range, I think is by loan size range, and industry, that got PPP loans of $150,000 or more. Now, the $150,000 is a key number. We're going to discuss that because there might be some changes coming along the way having to do with those $150,000. However, if you have maybe 2-3 customers that you're doing PPP loan application for and you get really good at, all you have to do is open up that Excel file, look for businesses in your area, maybe the industry that you specialize on, send them a postcard, send them a letter and saying, hey, I'm doing this proactively for my clients, this is how much we charge, whatever it is. I suspect that most small business owners are actually going to go to their CPA, to their accountant for this. But in my experience, many CPAs are saying, that's not my thing. Talk to your payroll company, talk to someone else. Or if this bulk of the forgiveness happens during tax season next year, they're just not going to have time for it. So I think it's an enormous opportunity for anyone to get deeply into this. I know I will. I know I won't be able to handle every single request that I get. Matthew and Jacob might be in the same boat, right? So we're going to have a lot of new clients, a lot of new opportunities. to do business with these clients after PPP, right? Because if you help someone not pay the government back $150,000 and their current CPA couldn't do it, I think they're going to start trusting you a lot more. So Matthew and Jacob, welcome. And let me just start by asking you questions right away. So Jacob, last week, the SBA announced that the PPP forgiveness portal was open. In other words, the SBA is actively accepting forgiveness, but the banks are not jumping into this. A lot of small business owners are waiting. What's going on with what's the state of the forgiveness process right now?
Yeah, so there's multiple reasons that people aren't rushing out and dropping their application right away. A few of those are, from the law standpoint, you have 10 months after the end of your covered period to apply for forgiveness. So that covered period is either 8 weeks from your loan funding date or 24 weeks from your loan funding date, but you have 10 months from there. So the earliest anyone would have to apply is you're talking March of next year, right? Because April is when they started, 8 weeks after would be May plus 10 months, right? You're like March of next year, right during tax season, right, is when the first person would actually have a deadline of having to apply. So that gives the people a lot of time. So they're not in a rush to go apply for this. The next piece is from the bank's perspectives, many of them have not opened their portals yet. And this is because the SBA has not actually opened up the portal for full forgiveness applications. So the SBA did open the portal for the easy forms, but not for the full forgiveness applications. The other reason the banks are not in a rush to do this is they look at Congress, and Congress has a couple bills out there to potentially change some of the rules of forgiveness still. So as they are looking at Congress saying they might change those rules, so maybe we don't want to finish our portal and open it up for everybody and watch those rules change. So from that standpoint, the banks are saying, why should we open up yet? We should hold off on opening this up and pull all that together. And most people are just stepping back and saying, let's hold and wait to see where this develops and goes before we submit our application and things change again. So from that standpoint, obviously, there is a varying degree of complexity as well. So and the more complex this is, the more time I would think you would want to wait for forgiveness. But to that, Matthew, what are you seeing on those complexity levels and the impact that's having on the forgiveness side?
Yeah, it's interesting. Ever since they launched the PPP Flexibility Act, which basically established it to where if you received your loan or your SBA loan number before June 5th, you had the choice between an 8-week covered period or a 24-week covered period. And this really changed the two main things. This whole bill is built around getting people back to work, right? So you have to deal with not only the FTE, full-time equivalent headcount, but also the wage reduction aspect of it. And truly, these are probably the areas we get the most questions on. So imagine if you were a business that you applied early. You had the 8 weeks. That's what was planned at the beginning because they didn't make that change till like the 7th week, of course. You use all the funds and you're starting to get back together. Everything's going well. And then all of a sudden you've got this second round of COVID come around and you're having to shut back down again. Now it becomes a question of what do you have to do with this FTE count? How does that play into safe harbor? Are there strategies to be played with people if they were fortunate enough to wait and save some of the money? Like how do you figure out how to use those funds correctly for different scenarios to ensure that they're still getting that same amount of loan forgiveness? The goal is to have everything forgiven. The one that's a little bit more concerning, or I really want to draw attention to, is the wage reduction one, though. So for a lot of our clients, we had people that they basically had to go like 10 or 11 weeks because they just had a little bit more money than the actual 8 weeks, and they don't need the whole 24 weeks. Well, if you have a situation where you actually had to reduce people's wages, let's say they were making $20 an hour and you dropped them down to $14 an hour, past that 25% threshold, you actually have to take the difference that's past the 25% and extend it, figure out what it would cost for the entire 24 weeks for the hours, everything else. And that's something a lot of people are very confused and just not sure on. So we've spent a lot of time consulting on those things. One of the ones, though, that I haven't been able to answer for people, and Jacob, maybe you can help me with this one, is we know that you were able to use like the PPP funds for utilities. Well, for myself and my team, we're still not going in the office. We're working remotely, which means I now have employees that have their own electricity bills that have gone up, their own, increases in internet and all of these different things. How can businesses address that? How do they can they use those as utility expenses possibly?
Yeah, so when we look at this, my thought is if you do a true reimbursable plan and you reimburse your employees for their electric expenses, they likely qualify. When we dive into utilities, you don't see the exclusions that you have in rent, where the agreement had to be, or the obligation had to be entered into before the start of your covered period. You don't see those things. So we do know there is limits on owners' deduction of utilities expense. And from that standpoint, in the FAQ, it talks about those utilities have to be basically the same as last year's. And if they're not the same as last year's, they don't qualify. But it does not touch on the employee piece. And I feel like as long as you document it and you have proof of it and you're actually reimbursing those expenses, the same way they would be deductible for tax purposes, and we have a structure out there that what is required to make them deductible for tax purposes, then those would qualify for the utilities under the PPP Act. Now, the benefit of that may not be what it once was. Now that we have that expansion to 24 weeks, not near as many people would need that extra money in utilities, but that is there for that client that may need it, and could be really useful. So obviously, I feel like there's a lot of consulting opportunity in that one as you look at this, and a lot of variability between client of what that's going to look like. Hector, what else are you seeing as we look at the PPP world and the impact of things?
So yeah, I'd like to mention a few things, but I wanted to touch base. You gave us really good insight. So if you have employees that are working from home and now they're incurring possibly a higher speed internet, which is a little bit more monthly fee, and the employer is probably having to pay that out of pocket, and maybe the electricity bill is leaving a little bit, paying that out of pocket, and some miscellaneous additional expenses, maybe adding additional phone lines, virtual phone lines, all those things would qualify as utilities. And if the business is paying for it directly or they're reimbursing the employees, that could be forgivable. And as you know, and this is getting deeper into tax law, but if you're employed with a W-2, usually you can deduct a home office, right? So you want the employer to pay for that. And as an employer, look, if the employee is not asking for it and you can get it forgiven just with payroll, then you're not going to jump ahead and do it. But if you want to help out your employee and maybe you're coming up short on the wages side or in the rent side or your regular utilities for the PPP forgiveness, this is kind of a way to kind of get you over that hump and give a great benefit to your employees. So I think that's just great insight. In the utilities world, there's one thing that worried me about the FAQ that was released last week, right? There's a frequently asked questions the Treasury sent out to clarify some things. And if you remember, like a month and a half ago, they released something explaining that utilities also included transportation. And I had a lot of us kind of talking about it, a lot of, cooler, what's it called? The water cooler conversation. Hey, did you hear you can do utilities for, use transportation for utilities for the PPP? But it wasn't very clear what transportation meant. And in the FAQ, they further clarified that this was meant to replace or in lieu of businesses that maybe don't have heavy home office expenses or heavy utilities expenses because maybe they're in the transportation world, right? Or maybe you have a restaurant that used to be a full brick and mortar restaurant. They closed down, they turn into, let's say, a food truck, or now they're doing all delivery, or maybe they're opening only in the morning or whatever, and they're delivering the rest of the afternoon. We've seen a lot of businesses kind of pivot to delivery, web-based, going to the customer's home, the customer's business to perform those services. And these are new incurred expenses pre-pandemic that really weren't there. So that transportation expense is really meant to help those people, right? If you have a brick and mortar restaurant that already has a high rent and high utilities, you're not going to all of a sudden be able to buy vehicles for all the owners and say, hey, we can, throw that into utilities, transportation, because the PPP rules allow us to do so. So that's kind of the two extremes that we want to look at. And also to touch on Matthew's point, the FTE calculation, right? What if an employee left and came back and there was a gap of a couple of weeks because they were unemployment for a while? How would that work? We definitely have to cut those weeks up. So there's some Excel work, there's some spreadsheet work that we need to do. ADP has great reports, and I'm going to trust them. But I'm also worried that ADP is not taking into consideration special cases, gaps when the employees leave. Who's an owner, who's not an owner, what are the owner limits? So even though these payroll companies, Gusto, ADP, Paychecks, may give you really good payroll reports, you might need to kind of dig in it and do some manual calculations to get this done correctly. So there's some complexity there, and this is where we're going to earn our money, basically. So really, that's all I wanted to mention. I mean, like Jacob said, they might pass some law where all loans under $150,000 will get automatically forgiven. That would be 80% of the loans, which will take a lot of weight of small businesses, of the SBA, of the IRS, of banks, but that will still leave 1 million loans out there, right? And remember, all loans over $150,000 that was published in the Treasury website, you can download every single business's name. So if I was an accountant, a business consultant, someone trying to find clients to help around this, focus on the loans over $150,000 because they're going to have 10 to, like at least 7 employees, right? So 7 to 15 to 20 employees. There's going to be some complexities on the hours, the FTE and the wage reduction. And that's really where we need to earn our stripes, I guess, per se. So I think there's a huge opportunity there. And by the way, Jacob, Matthew, and I, we're going to be doing loan applications for our own customers for the next couple of weeks, month or so, assuming the banks open up the portals. And then on September 21st, Monday, September 21st, we're going to do a webinar, which we're inviting you to. There'll be a link in the description below. It's a paid webinar where each of us are going to show you examples of loan forgiveness applications that we have done, calculations, issues, gotchas, all those things. I think that there's a lot of webinars out there that explain the law, right? But just like if you attend any webinar on taxes, you can attend it, you learn something, but you never walk out saying, now I know how to fill out that form, right? So that's what we want to do with this webinar. We want to show you examples of stuff that we've done, maybe some examples from our colleagues that have, the customer names hidden and all that stuff, kind of to show you what we've done, both the easy form and the long form, self-employed, fully employed, S Corp, C Corp, partnership. We're going to cover all the examples, and we invite you to that webinar. And hopefully, assuming there's no major changes to the law and the forgiveness application portal start opening up, we'll be able to do it on September 21st as intended. If there's any changes, we will let you know. Anyway, we'll hope to see you there. Matthew and Jacob, thank you very much for joining me today. We'll be continuing these conversations privately, getting prepared to help our clients. And thank you, everybody, for watching this video. I hope it was helpful. Thank you. Till the next one.